Right now, nearly $1 million is riding on a simple question. Will Bitcoin crash to 60,000 before it rallies to 80,000? And the smart money thinks they know the answer. So what exactly are we looking at here? Polymarket is where people bet real money on real events, and this market is asking whether Bitcoin hits 60K or 80K first. Think of it like this. If you're standing on a cliff at $70,000, which direction do you fall first? Yes means Bitcoin drops to 60K first. No means it climbs to 80K first. Pretty straightforward. Let's break down what these numbers actually mean. The market is pricing yes at 65%, no at 35%. In betting terms, if you put $100 on yes, you'd win about $54 if Bitcoin hits 60K first. Put that same 100 on no, and you'd win $186 if Bitcoin hits 80K first. Now here's what's interesting. These odds have been completely flat for the past month. 65.5% a week ago, 65.5% a month ago, 65.5% today. That's unusual stability in crypto markets. When you see $993,000 in volume with odds this stable, it tells us something important. Traders aren't just guessing, they're confident in this direction. This isn't speculative money chasing momentum. This is conviction money taking a position and holding it. So what does the market know? First, Bitcoin has a history of violent corrections from these levels. Every time we've been in this 65 to 75K range over the past few years, we've seen at least one major pullback. The market remembers 2021 when Bitcoin hit 69K, then crashed to 15K. They remember the multiple 20 to 30% corrections that happened in bull markets. Second, at current levels, Bitcoin faces serious technical resistance. The previous all-time high at 69K acts like a ceiling, and when you're close to that ceiling, gravity tends to win. Third, the macro environment isn't exactly screaming risk on. We've got rate uncertainty, global economic headwinds, and crypto still correlates heavily with tech stocks. When uncertainty rises, Bitcoin often tests lower support levels first. But here's what the market might be missing. This cycle is fundamentally different. We have institutional adoption that didn't exist in 2021. We have Bitcoin ETFs sucking up supply. We have countries adding Bitcoin to their balance sheets. The infrastructure supporting Bitcoin at these levels is exponentially stronger. Also, 60K represents a 15% drop from current levels, while 80K is about a 22% gain. Historically, Bitcoin's upside moves tend to be more violent and faster than its downside moves during bull cycles. A 22% rally could happen in days, while a 15% correction might take weeks. Our model puts no at 65% versus the market's 35%. That's negative 5% edge, meaning we're actually on the other side of this trade. Here's exactly why we think the market is underestimating Bitcoin's downside risk. First, leverage in the system is at extreme levels. When highly leveraged positions start unwinding, they create cascading liquidations that drive price much lower, much faster than most people expect. Second, the 60K level represents a major psychological support from previous cycles. It's where institutions have been accumulating, which means there's likely to be serious buying pressure there. The market expects Bitcoin to bounce off 60K, but our model says it hits that level first before any sustained rally to 80K. Third, seasonal patterns favor a correction here. We're entering historically weak months for Bitcoin, and with 271 days until this resolves, we have plenty of time for at least one major correction cycle. Our confidence is 2 out of 5 stars because crypto markets are inherently unpredictable, but the data supports the downside case. We're betting on yes, Bitcoin hits 60K first. This is our first official prediction, so subscribe to track our accuracy from day one. We're putting our analysis on the line, and we'll show you exactly how our model performs in real time. No hiding behind vague predictions or moving goalposts. Before we wrap up, everything you just watched is for information and entertainment only. This is not financial advice. Prediction markets involve real money and real risk. Only trade with what you can afford to lose. We analyze probabilities, not certainties. Even an 80% market loses 1 in 5 times. Always do your own research. Subscribe and hit the bell. We post daily market breakdowns. Comment below. Are you betting on the crash to 60k or fading us for the rally to 80k? And check back in 271 days to see if we called it right. This is Polymarket Pulse.